Welcome to Athlete-Specific Tax Information, presented by Pro Bono Students Canada, the University of Calgary Faculty of Law, and the Canadian Sports Centre of Calgary. An amateur athlete trust is an extremely useful tax deferral device that is available to Canadian athletes wanting to build interest on money they accrue in the course of their athletic pursuits. Amateur athlete trusts also allow athletes a method of adhering to the rules governing amateur status in sport. Listed here are the two main reasons an amateur athlete would want to be involved in an amateur athlete trust. Amateur athlete trusts are similar in function to RRSPs in that any money invested in the trust is not taxed until it's withdrawn. But they're athlete specific, and money contained in the trust must be withdrawn within 8 years of its original investment. In order to take advantage of an amateur athlete trust, an athlete must enter into what is called a qualifying arrangement with a financial institution or insurance company. Any revenues earned by that athlete that qualify can then be deposited into this account or qualifying arrangement. For more info on amateur athlete trusts, see the CRA website, which has much educational information, including the question and answer section available through the link herein listed. In terms of GST and HST, the simplest thing for an athlete earning less than $30,000 a year in appearance fees, advertising services, speaking engagements, coaching services, and related activities is not to register or charge for a GST and HST. If required to register because an athlete exceeds the $30,000 limit, an athlete should collect GST and HST on any appearance fees, advertising services, speaking engagements, coaching services, and related activities that they may engage in. As a rule, any funds an athlete acquires from the Athlete Assistance Program are not subject to taxation. As such, athletes should not include Athlete Assistance Program funds in their tax returns. Contrarily, any winnings, World Cup or World Championship earnings, or funds from the Athlete Excellence Fund distributed by the Canadian Olympic Committee are subject to taxation and must be included in an athlete's income tax return. Technically, any vendor-in-kind sponsorships or non-monetary prizes that an athlete receives need to be claimed as income based upon its fair market value. For example, if an athlete were to receive a year's supply of Gatorade as a vendor-in-kind sponsorship, he or she would have to calculate its fair market value and claim that sum as income in their tax return. Incorporating oneself, or forming a sole proprietorship in order to file one's taxes as a business, carries with it many benefits for those who are so inclined and possess the time, wherewithal, and necessary motivation. Tapping into the multiple tax deductions available to small businesses in Canada and accessing the lower business tax rates offered are great incentives for amateur athletes hoping to reduce taxation. However, the steps required to structure a business are beyond the scope of this presentation and may require the initial aid of a tax professional. Again, depending on the circumstances of an individual in regards to their taxable income, forming a sole proprietorship or incorporating can be an excellent avenue available to amateur and student athletes. Obviously, minimizing one's taxable income is an appealing goal for all. As discussed in Part 3 of the general tax presentations, RRSPs are one fantastic method for doing so. Amateur athletes are also provided with a mechanism for reducing taxable income specific to them via the Amateur Athlete Trust, which is discussed earlier on in this presentation. Other methods are also available for reducing taxable income. For instance, any interest being paid on a loan counts as a tax deduction. Moreover, several tax credits are offered by the Canadian government, including the Public Transit Tax Credit, the Education Tax Credit, and the First-Time Homebuyers Tax Credit. Tax credits function by giving an individual a percentage of the amount spent on the specified tax credit to claim against one's taxable income, while a tax deduction allows a person to claim the exact amount spent against their taxable income. Thank you for listening to the athlete-specific portion of this Canadian Sports Centre Calgary presentation in conjunction with the University of Calgary Faculty of Law and Pro Bono Students Canada.